Hey everybody, welcome to another live stream. Leave a comment so I know you're here, because we do 2 raffles every live stream, and you could win a $20 Amazon gift card. So just comment away. How'd everybody do this week? I think I was up a little this week. I don't really look at my portfolio each day. I just well, I did a 30,000 subscriber reveal video, and that's coming out Monday. So I should be at 30,000 by Monday. And then the portfolio reveal video will be Monday morning. It was it's a really short video. I think it's only like 4 minutes, maybe 5 minutes. I was going to talk about how to calculate prepaid expenses and accrued liabilities. Not much has changed since 20K. Well, I did buy a bunch of stocks. I bought Facebook and lost a lot. Oh. Hey, Ashley. I bought BABA since the 20K Johnson & Johnson Energy Transfer. I got rid of my Waiter holdings, the SPAC. That was terrible. I wish I never bought that. M. Taylor. Yes, I'll leave a comment. Somebody emailed me and said I should add net debt to my valuation. Net debt is debt minus cash. And some people have mentioned this before, but if you were trying to figure out your net worth, and you do take debt into account and cash, you would look at all your assets. If you owned a home, the value of the home, say it was 200K, and then if you had a mortgage, like a 50K mortgage, and then you would, the cash in your bank account, and you would add all that up if you're looking for your net worth. Say something. What do you mean say something? Can you hear me? You should be able to hear me today. Last week I messed up. Mr. Rapper. William Speece. That's an interesting one. I'm not that's a SPAC, right? Fubo's a SPAC. What did I write Fubo? Ralph S. Ziad Sahil. Because if you were dissolving a company, liquidating it, then you would need to take into account how much debt and cash they have. But I think for valuation purposes, when you take on debt, as long as you can service the debt, and pay the interest payments on it, you do over time but when you do have a really high debt load, if you're really leveraged, then you're going to have a higher whack. The whack is a discount rate, so it's not, that will lower the valuation. Because debt does help you, buy things. It gives you cash, and you could buy employees, you can buy factories. So it does, you are hit in one way or another. But a certain amount of debt is considered healthy. Being debt-free, it's not like should be the goal of every company, being debt-free. The goal of every company is to maximize shareholder value. And if that means adding debt to do that, then so be. Robert or Javier Gonzalez, Activision Blizzard. Yeah, Activision Blizzard's interesting, right? Because that's an arbitrage opportunity when a company is willing to pay 95 and the stock is trading at 80, so it's like a free 50, right? That's the arbitrage gap. But the reason it's trading at 80 is because there's a good chance it won't go through the acquisition. So that's why it's not trading at close to 95. If it was a slam dunk acquisition, it would be pretty much at 95. Diego, Robert M. Agav. Wait, what did you say, Ben? CTRA? CTRA. Coterra Energy. An E&P company. Kinder Morgan. I did Kinder Morgan. Lots of cash flow. Yeah, these oil and gas companies are killing it in 2021. Amazon, let's see their debt to equity. Amazon has 116 billion of debt and 138 billion of equity. So they have more equity than debt, which is ideal. So if a company has than debt, I wouldn't say they have a lot of debt. Of course, you want to look a little deeper, but if a company had, is it like American Airlines, they have a lot of debt. Like American Airlines has 46 billion of debt, and they actually have negative equity. So that's, I would consider a highly indebted company. Although you want to, of course, look deeper. It might not be as bad as you think. I know Boeing has negative equity. Boeing has 58 billion of debt and negative equity. They have they did a ton of buybacks. That really brought down their it's like you could read one article and they say this is going to be the worst recession. 2022 is going to be the worst since the Great Depression. Then you can read another article and it says no chance of a recession. Everything's fine. Ricey may be big. I like Rolls Royce. Lithium. Okay, so you have to get picked twice to win. 18. Diego. And if you're not on the sheet, let me know so I can add you. 13. 10. Empire Company Limited. Yeah, ABCL. I'm down. That's probably my worst performing stock. You'll see on Monday I'm doing a portfolio reveal, so you'll see ABCL. Diego. So Diego, make sure you email. So a market crash is worse than a divorce, because when a market crashes, you lose half your money, but your wife is still around. Google account. Yeah, Diego, make sure you email me. So if you ever see prepaid expenses on the balance sheet, I'll give you an example of how it works. So let's say you you issued some debt. Say an investor bought say it was like 2 million of debt, like a bond from you. An investor bought a $2 million bond from you, and they're holding the bond. So in return for that, for giving you $2 million, every year you have to give them $120,000 on the last day of the year. And then, of course, after say 10 years or whatever, then you have to give the $2 million back. So you have to pay interest of $120,000. Okay, let's just do the example I have. I forgot I wrote an example. Okay. Okay, that was for accrued liabilities. Okay. So let's say you pay your landlord $120,000 on January 1st for your entire rent for the year. So that means it's $10,000 a month for rent. So you give your landlord, write them a check for $120,000 because that's what they require. So on January 1st, you go to your balance sheet and you remove $120,000 of cash. So you credit cash. When you credit an asset, it decreases. When you debit an asset, it increases. So I'll just put you decrease cash 120,000 on your balance sheet. So as we know, assets equal liabilities plus equity. So that always has to happen. So we increase another asset called prepaid expenses. $120,000. So that's the first thing you do. It's pretty straightforward, right? So you're carrying an asset on your balance sheet called prepaid expenses. And every quarter, you have to do your financials and give them to your investor. So on 3/31, you would have used 3 months of your warehouse, of your space. So it's 1/4 of that $120,000 has been used. So you decrease prepaid expenses because $30K. And then you have to report on your income statement. I guess operating expenses, $30K. So how does this balance now? Well, one asset is lower. And this operating expense on the income statement anything on the income statement at the end of the year or the end of the quarter, you take whatever your net income, the bottom of the income statement, and you transfer it over to retained earnings, which is the equity section of the balance sheet. So equity is lower. By putting an expense on the income statement, it lowers your equity balance on your balance sheet. So that's how it ties. 30,000 is decreased on your asset section, and 30,000 is decreased on your equity section. So you just do this every quarter. So 3/31, then you do the same exact thing, same thing on 6/30. You use another 3 months of your warehouse. So you have to decrease prepaid expenses, 30,000, and put it onto the income statement as an expense. Because, oh, thanks a lot. Yeah, 30K. It's growing fast. Because if you pay for something, you can't put that on the income statement just because you pay for it. Or if you receive cash, you can't put it on the income statement just because you received it. The only way you could put it on the income statement is if a product or service has been satisfied. So you can't put any of those expenses onto the income statement until you spend time in your warehouse. So you use the does that make sense? How prepaid expenses work? This is just one example. That's accrual accounting. You have to, it's not cash accounting. Because if you were a small business and you use the cash accounting, you would just book the entire $120,000 on your income statement right away. You wouldn't wait to do $30,000 a quarter. But if you look on the statement of cash flows in the first quarter, we would see that 120,000 of cash. Okay. Space sector, RDW, yeah. What's your thoughts on? Okay, so accrued liabilities. Okay, so an example is if a company has to make $100,000 interest payment at the end of the year. So this is what the other one is. So if say a bank in New York gave the company $2 million. It's like a loan or debt, whatever you want to call it. And Bank of New York says, you don't have to pay us the $2 million back right away. You can take as long as you want. You could take 50 years if you want. But they say you have to pay $100,000 every single year to us in interest for the loan. Those are the terms of the agreement. You could pay it back whenever you want, the principal, but you have to give us $100,000 on 12/31 of every year. So on your first quarter financials, when you used, because you have to break it up, the $100,000, $25,000 per quarter. Just because you're paying for the cash, just because you're paying the cash at the end of the year, doesn't mean that's when you book onto the income statement. So on your 331 financials, you have to put a $25,000 expense onto the income statement, but you didn't even spend any money yet. You didn't give Bank of New York any money as of 331. So you have to carry a $25,000 accrued liability on your balance sheet. And like, if you looked at the statement of cash flows, the CFO section, you would see cash is higher. Cash is higher by 25,000 because you didn't pay anything, yet you booked an expense. So the expense brings down your net income, but you didn't have to give out any cash. But we'll just focus on the income statement and balance sheet. I think it's easier. The cash flow statement makes it a little more confusing. So, hey, Richard. Hey, where's Ed? Ed's usually here. You do the same thing on a second quarter financials. You put a $25,000 expense onto the income statement because that's how much you owe Bank of New York in interest. Even though you haven't paid them yet, you still owe them that much for one quarter. And then you add $25,000 onto your balance sheet onto accrued liability. So now you have $50K in accrued liability. And then the third quarter, same thing. You book a $25,000 expense on your income statement and add a $25,000 to accrued liability. So now you have $75,000 accrued liability. And your balance sheet still balances every single quarter. You're decreasing owner's equity $25,000, and you're increasing your liabilities $25,000. So it's still assets equal liabilities plus equity. The equity is going down $25,000, and your liabilities are going up $25,000. Then on the year-end financials, once again, you would put a $25,000 expense onto the income statement because that's one quarter of $100,000. And you would remove the $75,000 accrued liability on the balance sheet because you're paying Bank of New York $100,000. You're wiring them $100,000 because that's the agreement. You have to pay at the end of the year. But you spread that $25,000 across each quarter because that's accrual accounting. You have to do it according to GAAP. So everything still balances, right? Equity is up 25. Equity is down 25K because you added a $25,000 expense onto the income statement. So that brings your equity down 25K. Liabilities are down 75K because you removed the entire $75,000 that you had on your balance sheet that was built up. And then cash, so assets down 100K. Everything balances. Equity's down 25K, liability down 25K, and assets down 100K. Does that make sense? So that's just one example of accrued liability. I think the most common accrued liability is payroll. Because if you have like payroll is always an accrued liability because if you pay employees say you pay employees on the 16th of the month for the first 2 weeks, the 1st to the 15th. You're receiving they're working for you, and not for free, but you're not paying them anything from the 1st to the 15th. So you're receiving that benefit without paying them anything. So you're building up an accrued liability for 15 days, and then when it's the 16th of the month, then you have to pay them. So you're building up this liability, and if there's like a bonus, if you have to pay employees bonuses, it's the same thing. You're receiving well, I don't want to make it too confusing, but I think it was good enough, that example. Yeah, the rent example was when we did accrued expenses. But in the rent example, if your landlord said you have to pay $120,000 at the end of the year, not at the beginning. You have to pay when the year is done, then you pay me. Then it would act similar to an accrued liability. It actually would be unearned revenue. Okay. This is good for me too, because sometimes, even if I understand it, just explaining it helps me kind of work through it and clear it up in my mind. Because sometimes you understand something, but you can't explain it. Like you can't clearly explain it. And that's the only time you'll truly understand something, when you can explain it to a 5-year-old. If you can't do that, you don't really understand something. Even if you think you understand something, you don't understand that well until you could explain it really simply. Because if you kind of understand something, then if I give you a different scenario on that particular topic, you're probably not going to understand it. When you could understand something inside and out from every angle, then you truly understand it. So Dot. Okay, so we'll do the second raffle. Leave a comment if you're here. Didn't Diego win the first raffle? No one's ever won 2 raffles in one day, except Diego. Diego won both, right? He's the one who won earlier, right? That's crazy. Ed, okay, we finished the raffle. I did a video on Voyager Digital. It trades OTC and actually looks really good. I think I may invest. It's like Coinbase, I think. It's similar to Coinbase. I'm not exactly sure what Coinbase does, but I think they're pretty much like Coinbase, but just a lot smaller. So they can hold your crypto wallet for you, and you can buy and sell crypto on their platform. And they also do staking. So if you have crypto, not all crypto, but certain crypto, instead of just letting it sit there like cash sitting in a bank account is a waste, you can earn you can stake your crypto. So it's kind of like earning interest on your crypto. You can earn more cryptocurrency by staking it or just get cash. They have 1 million accounts now as of 12/31. And look at their revenue. They didn't really have any revenue in 2020. It went up to 175 million in 2021 and now it's 416 million. And they're cash flow positive. They trade on the TSX. So if they trade on the TSX, they don't trade on the NASDAQ or New York Stock Exchange. They trade OTC, but you can get on TSX. But look how high it was, 34, and now it's come down a lot. But they have pretty good financials. Look how much their revenue's gone up. Let me look at Coinbase. Coinbase, it's just so expensive, Coinbase. I mean, it's been cut in half or more so. Look, Coinbase is trading. It's so hard to look at these charts. Is that right? Coinbase open at 381? Is that how could that be? Hey Jim. Coinbase, it says it opened at 381. And then it got close to that point a few months later, but now it's trading much lower. It's down 43% since it IPO'd. But how could it start trading so high? Did it do a split? $4.14. It opened at 381. Oh, yeah. Coinbase. It's traded at 328. What's a high? How could it start so high? That's crazy. If you don't want to invest in crypto, it's a lot safer to invest in Coinbase because it's similar to investing. You are getting exposure into crypto, but you don't actually own crypto, which is really volatile. Yeah, they're still not making money, I don't think. And they have a ton of revenue, $2.5 billion. Well, they do have positive net income. So they are profitable. But when you invest in a like a crypto mining company like BTCS, it was really low. So if you look at their balance sheet, how do I get you to run a due diligence on a company? Jerry Seinfeld. Look, it's Jerry Seinfeld. If you're a member on my YouTube channel or Patreon at the $99 level, then I'll do one ticker a month for you. If you're not a member, then just you can ask, and then I'll try to get to it when I get through all the others. But if you look on the balance sheet of these of crypto mining companies, you can't see it in Yahoo Finance, but they always list their cryptocurrency at the lowest value that it was trading at while they owned it. It's the same way as real estate. So if you bought crypto for, like, if you bought 1,000 Bitcoin when it was trading at $1, then your balance sheet would say $1,000 forever. It would never go up. It could go down. Like if you say you bought one Bitcoin for $42,000, and you would put that on your balance sheet initially, but let's say in a year it was 32,000. So you would adjust your balance sheet down to 32,000 and pass through a $10,000 loss onto your income statement. And let's say in 2023 it went to 50,000. You can't adjust back up. It's going to stay at 32,000 unless it goes lower at some point. It's the same way as land too. If you buy a piece of land and it goes up a lot in value, your balance sheet will not reflect that. But let's say it was 2030. And the Bitcoin was $100,000. It's like we said, it says 32,000 on your balance sheet. But if you sell it for $100,000, then your balance sheet would report a $68,000 gain. You do realize the gain when you sell the asset. Same thing with land. Kathy Weiss is going to beat her detractors. Let me see. The Twitter video, not many people watched the Twitter video. It was like one of the worst viewed videos. I don't know why. Twitter, same thing when I did a Twitter video last year. Hardly anybody watched it. Yeah, the way Berkshire Hathaway Berkshire Hathaway uses usually uses equity method accounting. So say Berkshire Hathaway, say their Apple stock is worth 100 billion as of 1Q 22. And then as of 2Q 22, it goes to 80 billion. So they report a $20 billion loss on income statement. And let's say 3Q 22, it goes up to 120 billion. It's a really good quarter. Then they report a $40 billion gain on the income statement. So with equity method accounting, you can adjust up or down. For long-lived intangible assets, you can only go down. You can't go up. So they put crypto into the long-lived intangible asset category. Even though you can argue that might not be the best place for it, but that's the bucket they put it into. Fuhat, you have an offer? Just DCA and try to. That Zim video is getting a lot of views. It's a ton of views. I think there's upside with Zim. It's just the rates are so high in the shipping industry, and I don't know. They might go higher because of the lockup in Guangzhou in China. So rates may continue going up. I'm just. You own Berkshire stock? I don't know what that means. You gonna give me a pass? I haven't watched the Zim video either. And people comment like, if it's so undervalued and so great, why don't you just buy it? But I wish I bought it a few months ago. But at this point, I don't know. I don't like investing in stocks that are so volatile, because then I have to keep watching it. Now, I think, well, Starbulk, Yeah, I think all shipping stocks are pretty volatile, pretty risky. I'm not saying they're bad investments. I'm just saying for my investing style, I usually wouldn't buy a stock like in the shipping industry. You really have to time it right. You can't. Um, yeah, van life. That is a good idea. Like you really have to catch it at the right point. Like if you bought it within the last year, it's great, right? Even in the past 2 years, look how much. This is Starbuck. You could have gotten it below 10, and you could have doubled or tripled. Same thing in the past 5 years, you could have got it below 10 and doubled or tripled. But you could see how volatile it is if you go back. In the long run, you can't make money. You have to really time it before it crashes. Zim doesn't look that bad. Zim has only gone up, but now it's coming back down. Yeah, Zim has come down quite a bit. What is that, like 30% from the top? I mean, this could be the new bottom and it could come up, but it's just too volatile. You can't hold it for like many years. So what do you think about high yield bond ETF? Any good books? What does anybody know any good books? That's the most popular, right? Intelligent. What's an example of a high yield ETF? Most of them are probably not good investments. Like I did a video on oil ETFs, and almost all of them went down within the past. If you held any of them more than like 2-3 years, you would have lost money. So this is an oil ETF. So if you got it in the 20s, unless you waited, you could have been down a lot. But you could see how volatile it is. If you got it any time up here between 2010 and 2015, even with this big run up, you'd still be down a lot. You would have had to really time it well, like down here. But you have to wait like 6 years. I mean, even if you got it at 15, unless you sold up here, IVR. That's an interesting one, right? IVR, Invesco. %18 dividend. It's just look at that drop. Whew. So if you bought it, hopefully there's a run up. It's trading really low. Two six. 2.6 is a good company. I did a video on 2.6. I'm trying to remember. Okay, see ya. Wow, yeah, it's down a lot. Look, it fell down back to like 2004 levels. Okay, I think I'm gonna call it a night. It's been an hour. I actually have to do something else. So Monday is gonna be the portfolio reveal video. Run Parasonic through your model. Panasonic. Okay, thanks for watching, and I'll see you next Saturday.